Module 3, Your Savings Account, Building Financial Security. So, in the last module we talked about checking accounts. Now, a checking account is a great place to deposit funds needed for everyday expenses, but a savings account is an excellent place to put money that you can afford to set aside and save for an emergency, such as a car repair, or for a particular goal, such as paying for college, or for something you want, such as the latest electronic gadget. And unlike checking accounts, which are either free or available for a small fee, a bank will actually pay you to keep money in a savings account. On a regular basis, usually each month, the bank will pay money into your savings account based upon the amount of money you have in it. This is called interest. Now let's talk about a couple of things to keep in mind when opening a savings account. First, the growth in your balance comes from the deposits you make plus the interest you earn. Sometimes the interest rate is referred to as a rate of return, or annual percentage yield, or APY. Second, savings accounts can sometimes charge fees for failing to meet a set minimum balance or for exceeding certain withdrawal limits. Make sure to be aware of any savings account requirements and to talk to your bank about any fees connected to your savings account. Once you start depositing money, make sure you keep track of your deposits, withdrawals, and transfers so you don't get any unexpected service charges. In fact, if you connect your checking and savings into a combined statement, it's easy to track just how much money you have available in both accounts. After you've accumulated extra money for unexpected expenses, you may want to consider opening a separate savings account for special purchases. One last thing before we move on to the different types of savings accounts available. It's important to know that you will not lose the amount you deposit in a bank savings account even if your bank goes out of business, since it's guaranteed by the Federal Deposit Insurance Corporation, or the FDIC for short. Your deposits are insured to the maximum extent allowed by law, which is currently $250,000 per account. Now, let's talk about the different types of savings accounts available to you. The first is a regular savings account. In this type of account, you earn interest based on a rate set by your bank, and you can access your money anytime. If you have a money market savings account, your interest rate increases as your balance increases, and your interest rate changes more often as the economy changes. You can access your money anytime, including by check. Then there's something called a CD, which is short for Certificate of Deposit. When you put your money into a CD, the bank pays you a set interest rate on a set amount of money over a predetermined period of time. This means that if you put money away for a set period of time without touching it, the bank will pay you a higher interest rate than it would on a regular savings account that you can withdraw money from. Generally, the longer the term of the CD, which can be as short as 7 days to as long as 10 years, the higher the interest rate the bank will pay you. A CD is a simple way to earn a higher fixed interest rate with no fees. It's never too early to start saving money. Now that you have a summer job, a savings account is a great place to put some of the money you earn from your job. Once you get in the habit of saving, you're on your way to building a strong foundation for your financial security.